My name is Amy Wall. I'm an enrolled agent, a federally licensed tax practitioner. I'm very interested in small business taxation. I have a master's degree in business administration, but probably more importantly, I come from a small business family right here in Tucson, so I'm very familiar with the pains and joys and ups and downs of owning a small business. One of the most important issues that the small business owner must deal with is business entity selection. And what that means is, what kind of business entity are you going to operate as? The five big ones, there's lots of kind of different flavors here, but the five big ones are sole proprietorship, partnership, S-Corporation, C Corporation, and LLC. I'm not going to talk about C Corporations today because they're pretty complex. That could be a YouTube video all by itself, and there are very few small businesses that elect the hassle of being a C Corporation. The business entity you select is going to have a tremendous impact on many areas of your business life. It's going to affect how much tax you pay, how many tax returns you have to file, your bookkeeping, whether or not you need payroll, how you're going to save for retirement, how your health insurance gets paid for. Many things are affected by the selection of business entity. So this is something you really want to get right. Let me start with the sole proprietorship. Sole proprietorship is the most common form of small business. The reason for that is essentially it's the default operation for a single owner business. If you haven't chosen to be something different, then by definition you are a sole proprietor. There are a lot of pluses to this. The sole proprietorship is pretty easy to form. Get a business license if you need one and hang out a sign saying open for business, and that's pretty much all there is to it. You have total control as the one and only business owner. You have complete control of this business. You get to make all the decisions. That's also one of the drawbacks of this kind of operation. If you're sick in bed with the flu, there's nobody else to take that meeting. It's kind of all on your shoulders. Another drawback to the sole proprietorship is that your net income is subject to self-employment tax, as well as federal and state income tax. Self-employment tax, I'm going to talk about that for a minute. I'm often surprised at how many small business owners don't understand what self-employment tax is or why they have to pay it. So if you've ever had a W-2 job, most of us have, you've probably at some point noticed that some of your money was being withheld for Social Security and Medicare. What you might not have been aware of is that your employer was matching that amount and sending both halves in to the government. And these essentially are your contributions to Social Security and to Medicare. Now, when you are self-employed, here's a quiz. Are you the employer, the employee, neither of the above, or both of the above? And of course, you are both. You are the employer and the employee, which means you are paying both halves of the Social Security and Medicare. It comes to about 15% of your net income. And as I say, in addition to that, you get to pay federal income tax and state income tax. Now, it's not a problem to contribute to your Social Security account. I mean, this is a good thing, and when you get to be a little older, you get to see what a good thing that is. It's a problem when you're not prepared for it. It's a problem when you sit down to do your taxes, not on April 15th, earlier than that, and you discover that, surprise, you owe self-employment tax. So it's really important to meet with your tax advisor during the year to get a handle on what kind of taxes you're going to have and be prepared to pay them. Next, we'll discuss partnerships. The partnership is the default entity for multi-owner businesses. So when we have more than one owner and they're not spouses, then we have a partnership. The plus of the partnership has to do really with the partners themselves. With more people involved, hopefully there's more funding. With the right combination of talents, we can have a lot more energy, more people to share responsibility. The drawbacks of the partnership, like the sole proprietorship, all the income is subject to self-employment tax. Unlike the sole proprietorship, however, the partnership has its own tax return. This tax return is an information return. The partnership itself does not actually pay tax. Instead, the partnership return, due on March 15th, by the way, collects all the income and expenses and then doles that out to the partners through what's called a K-1 form. The partners then take those K-1s, bring them to their tax preparer, not on April 15th. And that income and separately stated expense items are added to their own personal tax returns. So the partners are paying tax at their own tax rates, not at some other partner's tax rate, not at some partnership tax rate. It just gets added into your own income. Third business entity is the subchapter S corporation. We normally just call them S-Corps. The subchapter S corporation is not a default entity. It must be elected. It's elected by filing a form timely with the IRS. The S corporation is special in that not all the income is subject to self-employment tax. Your income from your S-Corp actually comes through two streams. One is W-2 wages. All active shareholders in an S-Corp must get wages. You're actually an employee now and you have payroll. The IRS expects each shareholder to get what's called a reasonable compensation, which we generally define as what you'd have to pay someone off the street with your qualifications to do that job. But if there's profit above and beyond that reasonable compensation to the active shareholders, it comes through to you as income not subject to self-employment tax. So remember, the self-employment tax is 15%. This can make quite a difference in your tax situation. Now, of course, this only works for businesses that are bringing in a lot of money, enough money to pay wages, and then also have profit in addition. The S corporation must have a separate tax return, just like the partnership, and that separate tax return is due on March 15th. Once we get into the levels of partnerships and S corporations, it becomes increasingly important to keep business and personal accounts separate. That nasty old habit of using a business check to pay your personal electric bill or vice versa, that's not going to fly. The IRS expects you to be running your business in a business-like manner, and we must always keep business and personal accounts separate. An LLC is an interesting entity. It's actually a state-created entity, so the IRS does not have forms or schedules for LLCs. Instead, a single-owner LLC is taxed as a sole proprietorship, and a multi-owner LLC is taxed as a partnership. Now, an LLC can also elect to be taxed as an S corporation. As an S corporation, you would still need the payroll and the separate tax return. The concept of LLCs is that there's limited liability protection for the owners. We need to be careful about how we understand this. A lot of people think that, oh, I'm an LLC, so I don't need to have insurance or anything because I can't be sued. This is not true. What the limited liability protection means in terms of an LLC is that your personal assets are not on the table to pay off the business debts. You can always be sued. Welcome to America. You can always be sued. There is no substitute for having liability insurance. Final note on this liability protection, there's a concept called piercing the corporate veil. If you have pierced the corporate veil by intermingling, mixing and matching business and personal finances, then you have essentially destroyed your liability protection, and a court will rule that you no longer have that corporate veil. So once again, very important to keep your business and personal bank accounts, credit cards, whatever else, separate. You can tell this is a very complex subject. We haven't even discussed pensions, health insurance. There's a lot more involved here. So of course I do recommend talking to a tax professional about your particular situation. I'd be more than happy to offer you a free half-hour consultation. Come and chat with me. I'd love to meet you. Thanks.